Hello aspirants, I am Inkar from Inkar IAS Academy. Today we are going to discuss about the 18th January current affairs. The topic taken from the Delhi editorial. The topic is India's real growth rate at the focus. The topic comes under our main topic GS3 inflation. The topic comes under our main topic GS3 Indian economy and issues relating to planning, mobilization of resource, growth, development and employment. First of all, why it is in the news? The GDP figures for Q2, that is a quarter two, the 24-25 present year concerning picture of Indian economy trajectory, highlighting a sharp deceleration in growth, and also it's raising the question about the economy's resilience and energy strategy. The present situation, the India GDP growth slowly significantly in 2024, dropping to 5.4% in the quarter two of financial year 24 to 25. That is a major concern. There was a dip of economic output in the first three quarters of 2024 that RBI downgraded that financial year 24 to 25. The GDP growth forecast from 7.2% to 6.6%, and India's long-term growth rate is projected to at 6.5% over the next half decade comparison with the Asian economies. That is a main concern with Asian economies like China, Japan, South Korea grew in 8 plus on a sustainable basis, but during the rapid growth phase. But India economic trend, that is a India's growth deceleration, that is quarter two of the financial year 2023 to 2024 is around 8.6 percentage. Now the quarter two of 24 to 25 year financial year is 5.4 percentage. The marks a significant return into growth levels seen 2 years ago, the reflecting a broad-based slowdown, that defining the quality of growth, that weakening the investment and trade. That is a main key economics trend. That is a slowdown of the capital investment. Slowdown of the capital investment reflect a lack of business confidence and challenges in the demand recovery, and also there is a import contractions, that is a indicative of reduced domestic demand, lower the industrial activity and subdued the investment sentiments. And the third thing is the private consumption growth. The robust household spending signals resilience in the consumer demand, driven in improving urban consumption and also service sector performance. The fourth thing is economic growth, that has weakened the domestic demand. Global headwinds that rising input costs have consumed, which is main constraint of the growth in the sector. That is a mining and quarrying growth, that is a regulatory issues that failed global commodity prices and subdued the industrial demand and also adversely impact the sector. So these are the major reason, and also there is a agriculture shows the resilience. The agriculture, that is a quarter two of the financial year 24 to 23 to 24 is 1.4 percentage, and also quarter 2 is 24 to 25. That is a main concern. And also there is agriculture resilient despite of H1. Agriculture growth has seen a marginal dip, that is a 2.8 to 2.7 percentage, which is indicate there is a challenge with erratic weather pattern. H1 agriculture growth refer the growth in the agriculture sector during the first of the year. And also there is a service sector. In the service sector also there is a strong private consumption, likely support segment like retail, trade and financial service. These are the major key economic trends today, and also it implicating the policy. We need to make the policy like we need to improve the economy through monetary policy and fiscal policy. First of all, there is a monetary policy. The accommodation expectation, that is a sharp decline of growth, raises the expectation for the RBI to adopt a more accommodative stance. And also there is a persistent inflationary pressure may limit the scope of the rate cuts. And also we need to balancing the growth and inflation. The central bank faces a challenge trade-off between the stimulating growth and maintaining the macroeconomic stability. And also for the financial fiscal side, we have to concentrate on the rising burden on government spending with monetary policy. The constraint the fiscal policy may need to take a larger role in supporting growth. The support lead to an increased fiscal deficit, potentially overshooting the budgetary targets. And also there is a structural challenge on investment. There is a challenges, that is a, despite of the surge in public capital expenditure in recent years, there is a private investment has remained muted. Also, there is a structural bottleneck like regulatory hurdles and global uncertainties need to be addressed to revive the private sector participation. So, we have the broader implication to concern remaining that first of all we need to address that there is a jobless growth, that is a adequacy of 6% plus growth generate 8 million job annually until 2030 unclear. And also there is a slowing down of the corporate growth and sluggish in investment, and also there is a inequality in growth. There is a very much challenge in the service sector, and also we have to improve our credit growth. And there is a main concern of rising NPAs, that is non-performing asset, is a significant rise, which is the unpayment of personal loan and credit card segment. These are the main constraint of the banking sector. And also there is a saving investment gap. This financial stability report shows that there is a financial saving of household fell into 5.3% of the GDP in the financial year 2023. There is a rising household debt, especially in loans, pose a risk in future saving and economic stability. And also we have the complex tax law. This laws, I mean the Indian laws in administration is a single biggest hurdle to foster the conductive investment environment. And also there is a lack of reforms is required. There is a many reforms is lacking. The appetite for implementing even pending labor reforms, it's appear diminished. And also there is a many fiscal challenges in the state level. There is an increased fiscal spending by states, especially in subsidies and also welfare schemes, and also raising of fiscal discipline concern. These are the programs mainly concerned about the fiscal challenge. And also there is a program like farm loan waiver, cash transfer, and beneficial contribute the rising food inflation. These are the main concerns. So India's economic future remains promising. The despite of challenges, the need of our is to address the structural weakness of the economy, and also we need to boost the investment of private sector, and also we need to improve the fiscal discipline to ensure the continued economic growth. Thank you so much.